Hello and welcome to From No Crypto to No Crypto. This is Blockchain Wayne with another cryptocurrency podcast. Today's episode brought to us by Coincierge Club, mobile private key wallet and point of sale solution, helping to make cryptocurrency safe, efficient, and the overall process more efficient while costing less. All right, today we're going to take a look at what is going on in the market, what's been happening in the last couple of days. Many of you had probably heard the term golden cross just thrown around on every news site and trading view, and maybe wondering what the heck is a golden cross. So to talk about a golden cross, we're going to start by talking about moving averages. Moving average is something you want to understand because then you'll understand what a golden cross is. So a moving average, it's an indicator that's used by a lot of people. It's a technical analysis. It helps smooth out price action by filtering out a lot of the noise from a lot of short-term fluctuations up, down, all that crazy stuff. So it is a lagging indicator. So it's not something, it's something that takes past history to people utilize it to predict future movement, or in this case, in a golden cross, which is a bullish movement. We'll explain how that works. So there's two basic types of moving averages that are used the most. So simple moving average, you may see it if you go to TradingView and you set up a chart. It'll either say simple moving average or SMA. It's basically just an average of an item over a defined number of time periods. So depending on what your time period is, you can see, and when I say time period, it could be a 50-day moving average, 30-day moving average, 200-day moving average. And then also there's exponential moving average, which actually just gives greater weight to the more recent prices. So it's influenced more by the most recent prices than the past history. So the most common applications of moving averages are really used to identify trend direction and also help you to determine support and resistance levels. So moving averages, people use a lot of them on their own, and we use them to indicate what a golden cross is. But one of the indicators you may hear me talk about quite often when I talk about technical analysis is what's called the MACD. Now, MACD stands for the Moving Average Convergence Divergence. And I'm going to break down each one of those real quick just so you can kind of get an idea of what we're looking at. So simple moving average, just moving average calculated by adding the recent closing prices and then dividing that by the number of time periods in the calculation average. So the simple moving average is calculated by adding the closing price for a number of time periods and then dividing this total by that same number of time periods. So short-term averages respond quickly to changes in the price, while long-term averages are slow to react, as you can imagine. So the simple moving average is a technical indicator that determines if an asset price will continue or reverse a bull or bear trend. The simple moving average is actually calculated as the arithmetic average of an asset's price over some period, and it can be enhanced as an exponential moving average that more heavily weights recent price action. So let's look at what the exponential moving average is. It's a type of moving average that places a greater weight and significance on the recent data points. The exponential moving average is also referred to as the exponential weighted moving average. So an exponential weighted moving average reacts more significantly to recent price changes than a simple moving average. So, like all moving averages, technical indicators used to produce buy and sell signals based on crossovers and divergences from the historical average. Now, traders often use EMA days, for instance, 20-day, 30-day, 90-day, and 200-day moving average. And so let's look at what a MACD is. So a MACD is a moving average convergence divergence. It's a trend following momentum indicator, and it really shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. So that's the MACD line. Now, typically on the MACD line, when you add that indicator to TradingView, you will see whenever those, there's certain crosses that happen that show a short-term bullish trend, reversal, or vice versa. When they cross the other way, you could see a bullish reversal. So MACD triggers technical signals when it crosses above or below. So above is a buy signal, or below is a sell signal. So the speed of crossover is also taken as a signal of market being overbought or oversold. So MACD can help investors understand whether bullish or bearish movements in the price is strengthening or weakening. Right? If you buy something and it's crossing below, chances are it's probably not the best time to buy. You probably want to wait for price to go down. Now, one thing you could do is is take these moving averages in the MACD and get on TradingView. TradingView, if you haven't already, go to tradingview.com. You can create a free account. They have a premium account. You don't really need that yet unless you get into some advanced trading. Because on a basic account, on a free account, you get up to, 3 indicators you can add to a chart. Now, typically, I'll add the Bollinger Bands, and then I'll add MACD, the Moving Average Convergence Divergence, and RSI. And those 3, not that those 3 are the end all be all, but those 3, if you're looking at, price action and movements, I can go into a lot more different ones when you want to get more advanced, but at least looking at trend reversals, resistant levels, those are good ones to help you realize what to do. You don't want to buy when the RSI is way oversold. Overbought. When it's overbought, it's way too high. You can expect, the price to potentially come down. And if you combine that with, you look at MACD and MACD is crossing under, it's just another indicator. Now those 2 individually could be wrong because RSI could stay high and you could continue to see a price rise. But chances are when you see multiple indicators, this is a perfect example where multiple indicators can show you that there's a reversal. Not saying it's bad, but yesterday you looked at the charts. Bitcoin was flirting with 5550 to 5600. Which was, heavy level of resistance, and we'd already busted through some strong resistance below it and kind of expected to see a retrace before we see what the next movement is. Could Bitcoin continue to move up? Most people think so, but you saw kind of what happened there. So rather than buying yesterday, if you were looking to get in a buy or making a quick trade to scalp some profit, you were looking at that. Versus now you look at it, the chart sitting right around 5,400. We've had a retracement, so now would be, a potential time when you look at the short-term charts, it looks like a good time to enter if you're looking to buy. Now, if you're holding long-term, whether you buy at 5,450 or 5,500, it's not that big of a deal. But if you're looking to scalp a trade and pull out a quick profit, then that's really what you want to learn how to do. So let's look at what is a golden cross, right? So we've heard that thrown around. They've been talking about it coming for a while. The golden cross is something that Bitcoin has not really done since 2015. That was the last time we had that. It is a candlestick pattern. It's a bullish signal. Relatively short-term moving average crosses above a long-term moving average. So the golden cross is a bullish breakout pattern formed from a crossover involving a security short-term moving average and the long term. So it's basically, what we're looking at is the 50-day cross, the 200-day moving average. Now we had a death cross back last year early on. That was the opposite. It was a bearish signal, which led us into, the brutal bear market that we saw last year in terms of price action, right? So this could indicate a, bull market because the last time we had that bullish cross was in 2015. It indicates the potential for a major rally. You kind of saw that happen yesterday with the price action really going up, and whether it sustains or not. I mean, really, it's you really want to look at what's going on in the charts because it's an indicator. It's one indication of what could be happening. But you saw what happened was we saw a massive spike in a very short period of time, and that really kind of sustained, and now we're looking at some retracement and potentially regroupment for a further run up. So it appears on the chart whenever an asset's short-term moving average crosses above the long-term moving average. And as I mentioned before, the biggest thing that can contrast, a golden cross would be a death cross indicating bearish price movement. So that's kind of what we're looking at. Hasn't happened since 2015. A lot of people are still kind of trying to signify whether or not the true bear market is over or not. A golden cross is an indicator that a lot of people use to indicate that. But hey, this is Bitcoin. It's very unpredictable, so who knows? Could we see some further down action before we see the true bull market start? It's possible, right? So you really just want to pay attention. There's a lot of talking heads, a lot of people you can follow on TradingView. And trust me, there's a chart you can find for every which way you want to believe. So, if you want to believe it's going up, you can find charts showing that the bull market's here and we're gone. If you believe it's going to go back down before we actually enter the true bull market, then you're going to find charts that indicate that. So just really, understand some of these indicators, learn how to do some of the basic stuff. And then you can, go further into that and learn how to do charting, learn how to do, some other different long-term indicators like Elliott waves, things like that. You just want to, Fibonacci retracement levels. You really want to spend some time and go deeper if you really want to understand the charts. But this is where it starts, right? Get on TradingView, play around, look at some of the people that have been followed the most, that have been upvoted the most, and kind of look at the technical signals they're going to use, and really just play around with some charts, pull up some charts, look at it, and do some paper trading if you want to. If you're interested in getting into trading, as far as to scalp a trade, whether you want to, just to get a quick profit, whether it's 1, 2, 3, 4%, depending on how long you're looking to stay in a trade, then what you really want to do is set up TradingView, and you can do some fake trades, paper trades. Just kind of you see something on a chart, act like you would enter that trade, and then look at when you would exit, and then realize that when you're playing with real money, there's a little bit more emotion involved. So that's another set to learn. So you want to start trading with something small. You're trading with a couple $100. A 10% drop may cost you, you may end up losing $20 on a trade. You're not losing big money, right? So that's where you want to start and really get to understand what that is. So where we're going today, I don't know, but really just wanted to jump in and understand. I know a lot of people have been seeing news articles like Cointelegraph and CoinDesk have been talking about the Golden Cross happening, but they hadn't really been elaborating too much on what it was. So I wanted to do this episode just to show you what it is. All right. So also in honor of, this is our 100th episode with From No Crypto to No Crypto. So we're going to be doing a crypto giveaway. Now, a couple of requirements for the giveaway. You don't have to buy anything. You don't have to sell anything. All you basically have to do is follow us on Facebook, From No Crypto to No Crypto. Find the Facebook page. Make sure you like the page and you're following it. Go in whenever I post this episode on there. Make sure that you share it, comment on it, share it, and then send us a private message with your Waves wallet address. Now, if you don't have a Waves wallet, make sure you download the Waves wallet. They have a desktop client. They have a great mobile app, and you just search Waves wallet. And it's really one of the only ones that I know of as far as has a mobile app with a built-in access to their decentralized trading exchange. Now, if you've heard me talk about decentralized trading exchanges in the past, it's something I feel is going to be very, very big in the future, especially with a lot of issues that have happened with centralized exchanges. So download the Waves wallet and send me your Waves receive address. Basically, download the wallet, create the free account, back it up, right? It's going to give you your private seed of words. Make sure you write that down, back that up, and then hit Waves and hit receive. And it's going to give you, of course, it'll give you a QR code, and then you can hit copy, and it'll allow you to copy that address and then paste that into a message. Send it to From No Crypto to No Crypto, and we will send you some crypto that we feel we're very bullish on. Sponsored, of course, by Concierge Club. So we'll send you some Concierge Club coins. Something that I will be bringing the CEO of Concierge Club back onto our podcast here in the next couple of episodes to really talk about what the project is, where they're moving forward with it. It's something that you definitely want to be holding for a little while. We'll send you some free coins sponsored by Concierge Club. So that's it for today's episode, guys. I want to thank you all for listening in, and we will catch you on the next episode.